All right, so Ed, let's start with the hegemons, the leading economies, South Africa, Kenya, Nigeria. How do you expect them to fare in the year ahead?
Well, so South Africa, there are significant question marks over growth, mainly due to the impact from the Eurozone crisis. Obviously, a slump in demand for South Africa's largest trading partner spells very bad news for South African manufacturing and output, which of course feeds into the unemployment picture here. Things probably for the rest of the continent are maybe looking a bit brighter, and certainly the results of these polls suggest a much brighter outlook for the major oil producers, by which of course it's Nigeria and Angola. And the consensus seems to be Angola is going to be recording economic growth around 10% next year. But that must be said, it is predicated solely on continuation of the oil price of around, say, $100, $110, $120 a barrel. It's anybody's guess where it's going to be in 6 months' time. But if it is high, then the Angolans are going to be sitting pretty.
What about the non-oil producers? Because this is where a leading economy like Kenya comes to the fore. And then Zambia, which I don't even know if we can really describe it as a frontier market anymore.
Well, that's very true. Certainly, if you look at the currency, the kwacha now is trading almost like a sort of an emerging market unit like the rand. And the correlation between the euro and the rand and the kwacha and those two other currencies is very, very close. It used to be 2 or 3 years ago that the kwacha only moved on the back of the copper price, given that copper exports do account for 80% of total commerce coming out of Zambia. But now the biggest driver, of course, is the whole risk-on, risk-off trade out of Europe. So in that sense, Zambia has migrated and evolved into almost a fully fledged emerging market currency. The outlook for Zambia is looking, again, relatively healthy. This despite the advent of Michael Sata on the scene in Government House. The gruff old man of Zambian politics, and he's stirred it up in his first
Cobra.
The King Cobra, and known for his venomous tongue, and he doesn't take any, suffer fools gladly, I think is the polite way of saying it, and he's shaken up a lot of things since he's been there. He's obviously fired the central bank governor, and it's now been 6 or 7 weeks, and we haven't seen a replacement.
What about issues like inflation? Because that's had a significant bearing on growth and stability in Africa. And as much as GDP, the national output, is high in many of these economies, it's almost undermined by shifting prices and also just shrinking wages, the purchasing power of Africans going forward.
Well, the scary inflation story has been especially prominent in East Africa. In Zambia, as we were just talking about it, in Zambia, inflation has been relatively muted, and indeed our poll suggests it's going to remain around 7 or 8% for the next year or so, largely due to increasing harvest and agricultural output from Zambia. This is due to a big government subsidy program. East Africa has been much less successful. There are many factors beyond the control of the authorities, and most notably a very, very severe drought in northern Kenya and western Kenya that has obviously hit food production, and it's sparked food inflation across the East African region. What a slightly more in the human sphere, of course, might be the monetary policy of the Central Bank of Kenya, which erred majorly in January when it decided to cut interest rates, one has to assume under political pressure because of an election next year, and it decided to cut interest rates in the face of accelerating inflation. Both domestic and international investors lost faith in the currency overnight, and it went right out to, I think, 108. And is now recovering, but the damage has been very severe.
What about monetary policy and even fiscal policy in other economies? Because if you look at Nigeria, for instance, although we expect buoyant growth, there are concerns as to the extent to which the government spends its money, these major infrastructure projects that they've got planned, whether they're going to follow through, those kinds of issues.
Well, in Nigeria, it's a huge concern that they're effectively spending money just keeping their civil service afloat. I think 70% of all Nigeria's budget is just simply recurrent expenditure, which to you and me means civil servant salaries. They're not investing in the power sector like they need to be. They're not investing in the roads. They're not investing in the ports. All these major infrastructural projects that will boost long-term growth. Instead, they're simply frittering away money, one might say, on keeping the armies of civil servants that keep Abuja afloat, keeping this machine going. And the new finance minister, Okonjo-Iweala, has made it sort of a priority to cut down on this recurrent expenditure in order to be able to boost the amount of capital spending in the overall fiscal program. But even her sort of quite dynamic approach is only leading to a shift over the next 2 or 3 years of 1 or 2%. I mean, it's very, very small.
What about fiscal policy in Kenya? Because they've got an election year coming, and you would assume that there's going to be massive government spending to just please the electorate.
That's very true, and the IMF has been talking about this for a long time, and coupled with, I think this has been one of the factors feeding into the weakness of the shilling. Yes, there's been a lack of confidence in monetary policy, but also people have been worried on the budgetary side. The government's just simply spending way too much money at a time of heightened concern internationally. If you look at obviously at Europe and indeed the United States, heightened concern about the ability of governments to finance their debt. Kenya's, in its previous budget unveiled earlier this year, said it would be increasing its aid spending, which was a bolt from the blue. And this is a country that's always relied on foreign aid for only about 5% of its revenues, and suddenly said it was going to increase this component by handouts from France and Japan. One hardly thinks that France is in a strong position to start writing bigger checks to Nairobi. And yeah, indeed, as the election comes on, there will be those fiscal concerns. And then, of course, given what happened in late 2007 and early 2008, when violence broke out in the Rift Valley, I mean, there's huge impact on growth.
Now, a country that's a bit of a mystique is Angola. We know there's oil, they're the second largest producer. We're expecting them to grow by 10% next year, but we know nothing about that economy, how it runs, smokes and mirrors. Are we going to see a little bit more penetration in Angola? You said that they're quite vulnerable to shocks in the oil price and also to production issues that have impacted their production this year, those technical issues. How are they going to manage in the year ahead?
The outlook is favourable as it stands at the moment. As you just said, simple technical issues, problems at wellheads and getting oil from underneath the ground onshore and then to ship it to the United States or China. These sort of logistical problems have hit their output. I think it's about 1.6 million barrels a day, which is well below what Nigeria is pumping at the moment. They should have ironed those out by now. They say they've ironed those out. Again, it's very, very difficult to know whether they're telling the truth or not, because it's an incredibly secretive regime. It's run by a small cabal of technocrats around President Dos Santos. Foreigners, and I imagine many domestic Angolans themselves, are desperate for more transparency and more openness to allow sort of foreign participation in the economy. But the fact remains that the status quo doesn't really need foreign capital. They're pumping so much money out of the ground that there is no real need for foreign financing, so therefore there's no real need for essentially transparency.
And the fact that this interesting issue that because Angola is doing well on the fiscal side, they're actually in a position to help Portugal, the former colonial power, deal with some of their sovereign debt issues. What does that mean for the budget and just their fiscal management going forward?
Well, so far they haven't actually signed anything, but the Portuguese Prime Minister was in Luanda last week. One can only assume cap in hand. And lots and lots of post-colonial ironies there, of course. I think, though, that the Angolans, for all their desire to walk tall and for all the status that bailing out their former colonial master will bring to them, and that status is considerable, but for all that, they are going to be looking at this as a more commercial relationship as well. And they will be very mindful of the impact of the slowdown in the global economy and indeed crude prices in 2008, which left their economy in a very, very parlous state. I think growth in 2008 was about 2.5%, and they were forced to, they had huge budget problems, had to go to the IMF, and they won't want a repeat of that. And so the last thing they're going to be doing is overreaching themselves with Portuguese bad bank loans just for a bit of status when their own outlook might be shaky.